Nvidia's three biggest customers spend $80 billion a year trying to replace it. Google, Amazon, Meta, the richest companies on earth, each building their own chips to break free. And Nvidia still controls 75% of the market. In this episode, we'll answer three questions. First, how did one company lock in 75% of a $200 billion market? Second, Google, Amazon, and Meta are all building their own chips. Why hasn't it worked? And third, what would it actually take to break Nvidia's grip? To understand how we got here, look at the growth curve. In 2020, the AI accelerator market was worth $10 billion. By 2024, $53 billion. By 2026, over $200 billion. A 20 times expansion in 6 years. What's driving this? LLM training ratcheted demand with every frontier model. Then inference at scale, every chatbot query, every API call runs on a GPU, and that demand never stops. And now reasoning models, OpenAI's O series, DeepSeek R1 need 5 to 10 times more compute than standard LLMs. Each new generation structurally raises the floor. So who captured this $200 billion opportunity? Overwhelmingly, one company. Nvidia's data center revenue hit roughly $190 billion in fiscal 2026. Blackwell Ultra GPUs are sold out through the end of the year. AB200 chip costs $30,000 to $40,000. A full NVL72 rack over $3 million. And customers are still lining up. Nvidia takes 75% of the market. AMD, despite years of effort, sits at roughly 13. Hyperscaler custom chips, maybe 10. Intel and everyone else a rounding error. But Nvidia's dominance isn't because it makes the fastest chip. Competitors have matched its specs. The real moat is far harder to replicate. CUDA. Not a chip. A software ecosystem. The most underappreciated monopoly in technology. CUDA has been around for 15 years. 4 million developers trained on it. PyTorch, TensorFlow, JAX all default to CUDA. The profiling tools, the inference optimizers, the multi-GPU libraries all assume you're running Nvidia. A company with millions of lines of CUDA-optimized training code can't just swap in a different chip. Retraining engineers takes 6 to 12 months per person. Re-optimizing a pipeline can take longer than training the model itself. The switching cost isn't measured in dollars. It's measured in years. Think of CUDA as what Windows was to personal computers. Every competitor has built a faster chip. None have replicated the ecosystem. Hardware catches up every 18 months. Software ecosystems take a decade. If anyone can break the CUDA lock, you'd think it's Google. Google has been designing its own AI chips since 2015. Its TPU V7 Ironwood runs on a 3nm process with Broadcom, in clusters of over 9,000 chips. It trains Gemini. By every hardware metric, a genuine peer to Blackwell. But Google keeps it to itself. TPUs aren't for sale. No external developer ecosystem, no third-party tools. Google's XLA compiler works, but covers a fraction of CUDA's tooling depth. Google built arguably the best custom AI chip in the world. And it only matters for Google. For the other 90% of the market, Nvidia is still the only option. Amazon's Trainium 3 went generally available in early 2026. Project Rainier 500,000 Trainium 2 chips is the largest non-Nvidia AI cluster on Earth, training Anthropic's Claude. Amazon's custom chip run rate, roughly $20 billion a year. Meta's MTIA is now in its 4th generation, running Llama inference and ad ranking across liquid-cooled racks. Both rely on Broadcom to design their silicon. Here's where the bull case for Nvidia gets challenged. 3 hyperscalers. Hundreds of billions spent. The performance gap has closed. And yet their combined share of the AI accelerator market is still only about 10%. The question is no longer whether they can build a better chip. It's whether they can build a better ecosystem. So far, nobody has. Which brings us to the company quietly profiting from both sides of this war. Broadcom. Ticker, Broadcom. Broadcom doesn't compete with Nvidia. It helps Nvidia's customers design the weapons to fight back. Google's TPU Broadcom co-designed it. Meta's MTIA Broadcom. At least 6 hyperscaler clients are locked into multi-year contracts. The numbers are staggering. Broadcom's AI revenue hit $12 billion in 2024. 50 billion projected for 2026. CEO Hock Tan has guided for 100 billion by 2027. In my view, Broadcom is the picks and shovels play of the AI chip war. During the California gold rush, the people who got rich weren't panning for gold, they were selling shovels. Broadcom is selling shovels to both sides. And business has never been better. Let's step back and look at the full competitive landscape. 9 companies across 3 tiers, and the power structure is remarkably clear. At the top, the monopolist. Nvidia, with its CUDA fortress and $190 billion revenue machine. In the middle, the hyperscaler self-builders Google, Amazon, Meta, all armed by Broadcom, spending billions to reduce their dependency but still accounting for only about 10% of the market. At the bottom, the direct GPU challengers and startups AMD, Intel, Cerebras, and Groq, each with a different strategy, and each facing the same wall. Let's look at the 2 most important challenger stories. AMD is the most frustrating story in AI chips. Its MI400, launched in 2026, looks impressive on paper. 432 GB of HBM4 memory. Nearly 20 TB per second of bandwidth. On raw specs, it matches and in some areas exceeds Nvidia's Blackwell. But look at the bottom of the comparison table. Under ecosystem, it says, ROCm, partial compatibility. ROCm covers about 70% of CUDA's kernel library. The missing 30%? Precisely the functions used in cutting-edge model training. Nvidia's profiling tools are more mature. Engineers trust them. Nobody will gamble a $10 million training run on a less proven software stack. AMD's tragedy is this: it is always the good enough second choice in a market that doesn't reward second choice. When the cost of switching is measured in months and millions of dollars, close enough is never close enough. The rest of the challenger landscape is sobering. Intel's Gaudi 3 missed its $500 million sales target. Without a CUDA caliber software stack, developers won't switch. Intel is effectively out of the AI accelerator race. Groq built the fastest inference chip on Earth, 500 tokens per second. Then Nvidia acquired its assets for roughly $20 billion in early 2026. The pattern is simple: build something faster than Nvidia, and Nvidia buys you. Cerebras is the one to watch. Wafer-scale chips, a $10 billion OpenAI partnership, filing for IPO at a $23 billion valuation. The most interesting bet in AI chips, and the IPO will tell us whether inference speed can become a durable moat. 3 risks could reshape this race. The most immediate: CAPEX sustainability. Google, Amazon, Meta, and Microsoft plan to spend over $300 billion on AI infrastructure in 2026 alone. More than the entire global semiconductor market. If AI revenue growth lags that investment, the cycle turns fast. Then the slow burn risk. PyTorch 2.0 with Triton makes it easier to target non-Nvidia hardware. ROCm improves every quarter. The CUDA mode won't break overnight, but in 5 years, it may cover 80% of workloads, not 100. That erosion is what keeps Nvidia's long-term bulls up at night. And finally, geopolitics. US export controls cap China at the H20. Huawei's ascend is gaining domestic share. A full decoupling splits the global AI chip market in 2, and Nvidia dominates only 1/2. Where does the $200 billion market go from here? My base case: 60% probability. Nvidia holds 65 to 70% share. CUDA erodes slowly but holds. Broadcom breaks $100 billion. AMD climbs to 15 to 20%. Market expands to 250 to 300 billion. Bull case: 25%, agentic AI demand surges and the market blows past 350. Bear case: 15%, the CAPEX cycle turns, Nvidia's growth stalls. Watch 3 signals. First, Nvidia's data center revenue growth. Below 40% year over year, the cycle is peaking. Second, AMD MI400 shipments in its first 2 quarters. Break 3 billion, and adoption is finally real. Third, hyperscaler custom silicon share of their own compute. 30% now. Cross 50, and the CUDA mode is cracking. Positive catalysts: a Blackwell successor launch or Cerebras IPO success. Negative, AI bubble narrative, or escalating chip export controls. I'm Big Z, follow me, see you in the next deep dive.